2023, because for you to put the budget in context, you have to take a view on what's expected, how the year is expected to be. We had started 2022 on a calm note, but the war broke out around March, and that, pushed the world into a turmoil. You have massive shocks to energy price shock, and inflation, rising to levels that we have not seen in decades. To add to the confusion, as central banks became worried about bringing the inflation down, they tightened interest rates. So making 2022 a very difficult year. The war, so we are entering 2023 with the war still on, with all the ripples, those negative ripple effects still on. And it's unclear when the war will end. If and when the war ends, it takes a while for the negative consequences, this supply disruption, to clear up, and for prices to normalize, and for central banks to gain enough confidence to begin to ease monetary policy again. So that's the note on which we have entered 2023, and a note of uncertainty. Will the war continue to support elevated commodity prices? It is uncertain. Uncertain in the fact that, yes, price shock has been positive at the beginning of the war and in the past, if you like, 10 months. But the longer the war lasts, the higher the risk of a global recession. And if a global recession should occur, that's demand will fall, and therefore prices will reverse. So there's no basis for any optimism about price. If the war ends and supply disruption clear up, prices will fall. If the war prolongs and inflicts a global recession, the decrease in demand will mean prices will fall. So let's just say it's not certain. As for the Nigerian government, it's not just that the world is in turmoil. Each country, has to count its own losses. Russia and Ukraine are counting body bags, but all other countries may not be counting body bags, but they are counting one loss or the other, in terms of see what has happened to inflation across countries, see what has happened to exchange rates in most countries, and of course what has happened to liquidity. Liquidity underpins exchange rates, and for Nigeria in particular, our situation is summed up by releases that have been made by S&P, by Moody, by Fitch, and they all come down very heavily on the same points: difficulties in external financing, crisis in fiscal situation, high debt costs, and high debt stock. So that's the note on which Nigeria is entering 2023. And that's what you would have expected the budget to address. In other words, diagnoses have been made by external credit risk agencies. Fix your external financial fundamentals, fix your fiscal fundamentals, deal with your debt costs, deal with your debt stock. And so, question is, to what extent is the 2023 budget as announced providing comfort on each of those? The second point is that the Nigerian government continues to denominate the budget in terms of components of GDP. They say oil revenue and non-oil revenue. It may be outmodeled. That may be an outmodeled way of tethering your budget, because it means the government, is considering only GDP, either the oil component or the non-oil component. In the world that we are in today, in the maybe 30 years ago, that would have made sense. 35 years ago, maybe up to 95, it would have made sense. In the world that we have been in since those mid-90s, nothing says that your GDP provides a better anchor for your finances than your assets, than your wealth. And the difference is that your GDP is the stream. Your assets are the spring. So Nigeria has to move away from oil GDP, non-oil GDP. And I give you a classic example. Saudi Arabia today, its GDP is still about $850 billion. But it owns one asset on its balance sheet, one company that is valued at $2.4 trillion. So if Saudi were to be announcing a budget and projecting how to fund the budget, and is talking only about GDP, which is what the Nigerian government is doing, and is not making any reference, it's not trying to leverage on the asset that is almost 3 times as big as its economy. So that's why you find that Saudi starts each budget year by announcing a target debt issuance. And they don't issue debt the way Nigeria issues debt. They don't issue promissory notes against income or GDP components. They securitize assets. They anchor, their budget and the economy on assets, which fuels GDP and therefore fuels the budget as well. Nigeria has to think very seriously of that. How realistic are the components of the 2023 budget? And by components, we mean the revenue projection or the revenue expectation, the spending, the deficit, and the debt. Last year, because how you establish realism is to refer to what you have just achieved. So in 2022, we recorded 1 trillion naira increase in federal government revenue from 6 trillion in 2021 to 7 trillion in 2022. So our current revenue generating capacity, factual, is 7 trillion. But 2023 budget is promising us that over the next 12 months, they expect to raise a revenue of 10.5 trillion. But we know that reality is closer to 7 trillion. So where would that 3.5 trillion come from in the global environment that we currently confront? I do think that it's a level of optimism that is at variance with reality. I do not think that the Nigerian government will realize a revenue of 10.5 trillion in 2023. The peak revenue Nigeria has ever raised was 7 trillion last year. And if you project that, maybe we'll do 8 trillion, maybe we'll do 9 trillion. No more than that. 8 trillion more likely. Now, if the revenue has to be discounted to be realistic, the spending presents some worries of their own. The biggest item of the spending last year was interest payments, debt costs, at 6 trillion for the year. So you made a revenue of 7 trillion and you paid 6 trillion out of it on interest. So you have only 1 trillion left. And the pattern, it's become a pattern. In 2021, you paid the same 6 trillion on debt costs. So it was the 1 trillion that you gained that became your net revenue that you could use on non-debt items. And then we borrowed 7 trillion to add to that. So debt revenue, debt spending, debt cost was 6 trillion. And the capital and recurrent spending ended up at 8 trillion. So you've spent 14 trillion. So 6 trillion on debt cost, 6 trillion on recurrent, 2 trillion on capital. So you're coming out of a year in which your total spending capacity was 14 trillion. And that your non-debt spending capacity was 8 trillion. But you're announcing for 2023 spending of 21, nearly 22 trillion. So from 14 trillion. I do not think that the leap from 14 trillion to 22 trillion is realistic in the global and the domestic context that we face. Then you are projecting the same 6 trillion in debt costs for 2023. Now, our total debt stock was, as of September 2022, announced to be 44 trillion. So if you paid 6 trillion on 44 trillion in 2022, interest rates locally and globally will be higher in 2023. So even if the debt stock remained at 44 trillion, you expect to pay more than 6 trillion in 2023. But you are telling us that you want to borrow an additional 10 trillion, that you want to securitize an additional 22 trillion. So we are actually talking about additional debt of 33 trillion. So you add 33 trillion to 44 trillion, you get 77 trillion. That's a 75% increase in debt stock. And they are telling us that that 75 trillion would have been achieved by May. So if you paid 6 trillion on 44 trillion, how much would you be paying on 77 trillion when interest rates on average will be higher? So the minimum markup to the interest payments last year is 75%, because that's the growth in debt stock, which takes you from 6 trillion to 10.5 trillion, which is exactly the same figure that you expect in revenue, at least as signed by the president. So debt costs are likely to take every penny of the revenue in 2023. So which means any other component of the budget, you have to borrow to fund it. Should we not think twice before raising that debt stock to levels that we nearly make the debt cost double? I think we should. So which sort of brings me to the final component. Given global realities, given domestic realities, how can Nigeria cope with the difficulties that are confronting us? To say that things are difficult is not to say that they cannot be surmounted. And I'm just suggesting that the current budget has not sufficiently addressed the issues, and that there are options available to the Nigerian nation to address these issues. I see two important omissions in the budget. I've already said that there are two anchors that you can teeter your budget to. You are either looking at output or income, or you are looking at assets. So the Nigerian government, the conversation in the budget exclude any reference to any asset. It's only talking, about income. And that, to that extent, it makes the budget very weak. So it's like the Nigerian government is running its finances only from its income statement and ignores completely the balance sheet. The only item of the balance sheet that the Nigerian government is talking about is debt. And they are telling us scary things about debt stock nearly doubling over the next 6 months. It's scary. So if you owe so much already, and you even plan to owe much more, what do you own? And that's not visible at all in the budget. If Saudi Arabia were to run its finances in that way, they will never have taken the step to establish the market value of Aramco. And Aramco would not have become the key anchor of their economy and their financials. So Nigeria owns a long list of companies, all of which the market values are not known, including LNG, in which we own 49%, is not listed in any stock market. So the gains of the owners from LNG is limited to its sales of liquefied natural gas. The gains of Saudi from Aramco is in two ways: the revenue from sale of oil and gas, and the valuation gains from the asset value of Aramco as a company, which has nothing to do with sale of oil and gas. And you can financialize that. So Nigeria has a long list of companies that are potentially financializable, but which cannot be financialized because we don't even know the market value. So, and all that Nigerian government has to do is to encourage all these companies to be listed in the stock market. And you open another financing source for yourself. You create equity issuance headroom. You create securitization headroom. So you stop borrowing with IOUs. You stop issuing promissory notes. You begin to securitize, issue investment grade bonds that will, service themselves. They pay dividends, no interest, and they can self-amortize. That's number one. You have, apart from corporate assets, you have a large and vast portfolio of real estate, which you can also financialize. But you're not referring to them. Most of our real estate assets are idle, and all that the government needs to do is to take steps to establish the market values of these assets, and you open the door to the possibility of anchoring the budget on that wealth. And the third is that we have vast infrastructure assets. Similarly, the market values are little known, and most of them are owned 100% by the government. The exception being telecoms, where we have liberalized and investors are coming to build the space. What is good for Nigeria is to look at those infrastructure assets and replicate the liberalization that has occurred in telecoms across rail transport, across power transmission, pipelines, and whatnot. In the process, you'll unlock investment, you'll unlock new revenue. You look at the employment that telecoms has opened up. You look at the revenue that it has opened up for the populace and for the government. And for you to gain competitiveness in manufacturing or in industry, you need the transport infrastructure to work. You need the energy infrastructure to work. And these are things that Nigeria needs to open up to investors, so that they can invest in those assets and make them to be sources of wealth and government revenue. And the final omission, so I've suggested that while the budget talks about only 4 components, revenue, spending, deficit, and debt, it is completely silent on assets. And that's the biggest source of economic and financial strength for Nigeria today, not output. The second omitted variable is, doesn't really matter how large the size of your deficit is. What matters is how you want to finance the deficit. So it's a bit of a shock that in 2023, the Nigerian government is proposing to close huge deficit gap by issuing debt. There are 2 liabilities you can issue on your balance sheet: debt or equity. So why is it in 8 years the only financing variable that the Buhari regime has considered is debt? And that we are at a dead end with the debt now. The world is beginning to downgrade our risk profile as an issuer of debt. We are a few notches above the default or junk issuer status. Ghana has been downgraded to the junk status. So if you're a few notches above the junk issuer status, should you come out and announce heavy additional? You shouldn't. As a matter of fact, if you look at the debt that we raised, the new debt that we raised last year was about 7 trillion. We had planned to raise 2.5 trillion abroad and 4.5 trillion at home. In the end, we only raised 0.5 trillion abroad. And the shortfall we raised at home. So out of 7 trillion new borrowing last year, about 6.5 trillion were domestic, and only 0.5 trillion was issued abroad, which tells you the doors of the international debt market are beginning to close on Nigeria. And nothing says that the door of the domestic debt market are also not at some point going to begin to close. If you are planning to issue 33 trillion in 6 months, the capacity of the domestic bond market today, the total capacity is about 27, 28 trillion. So it's already at 28 trillion. You want to add how much to that? So let's talk about realism. When you are trying to issue debt, there is what they call headroom. Nigeria's debt issuance headroom is not big. Your head is almost already touching the ceiling. So instead of talking about debt, let's talk about equity, which is what all strong developing countries are doing. If you look at India, they anchor their budget and economy prominently, conspicuously on assets. They have a platform, India Investment Grid, where they've listed more than 15,000 assets held at state and federal. And they say they are trying to raise an investment of about 2 trillion on them. And their annual target now is to raise $100 billion each year in FDI inflow. FDI is equity. Brazil has its own platform, Partnership for Private Investments. They've also listed thousands of assets and are daily, connecting those assets to global liquidity. Saudi is the latest to join them. It has created its own platform and is also beginning, it has a pool of assets, and is beginning to connect global liquidity to those assets. So Nigerian government needs to create such a platform, list all its national assets, and begin to connect global liquidity to them. So I see that if you continue with the debt-led approach, it leads to dead end. It creates problem, not just for the government who has to surrender all its revenue on paying interest. It creates problem for the rest of the economy because heavy borrowing by the government elevates interest rates for everyone. And uncertainty about whether government will get it or not will lead to stoppage in economic activity, will lead to gridlocks, stalemates. Whereas, if the government looks at assets and is raising equity locally and foreign equity is FDI, it will shift reliance away from debt. It will begin to lead to a reduction in debt costs, and so government can retain more of its revenue, and ultimately is the way to Nigerian prosperity, because every equity you attract into any asset makes that asset become a source of additional revenue, source of additional growth, just like when you did LNG or when you did the GSM sector. So the way forward, for Nigerian budget and for Nigerian country is, let's talk more about assets. Let's talk more about equity. You can raise equity on your corporate assets. You can raise equity on your real estate assets. You can raise equity on your infrastructure assets. If you look at the Indian or Brazilian platform, if India has a component of that platform, of the Invest India grid, that they call National Infrastructure Pipeline. So rather than claiming to be borrowing to fund the infrastructure, open infrastructure directly, to equity investors. If we should do that, then we should join the ranks of these countries who are relying now more on FDI stocks than on exports as the primary source of liquidity for their budget, as the primary source of liquidity for their country. If we could successfully join their ranks and do what they are doing, we'll see increased inflow of foreign exchange that will boost our foreign reserves and give the Naira some relief. We could see at least the Naira will be stabilized, if not become stronger. And that could reverse many of the losses that Nigerians have made to, rounds of devaluation, rounds of recession, all that came down to illiquidity, especially foreign exchange illiquidity. So the outlook of the Nigerian economy in 2023 is based on two scenarios. One scenario in which the government continues to ignore national assets and ignore investors looking only for creditors is the doomsday scenario, is the unsustainable scenario. And that's the scenario we've been operating under over the past 8 years, and we've been having hiccups. The alternative scenario is one in which the Nigerian government lists not just the debts that we owe, but they list the assets that we own. And they start a conversation about how to get investors to come and pump money in those assets as a source of revenue for the government, as a relief, as the liability, the preferred liability to issue. Don't issue debt, issue equity. And as equity comes into the various assets, they are going to make them functional. Rail will be built, power transmission capacity will be built, and those will fuel the growth of the economy, fuel employment, fuel government revenue further, and fuel the welfare of the country. So I describe that as the El Dorado scenario. So Nigeria is at a junction. You go this way, you go into doomsday. You go that way, you go into El Dorado. The choice is ours. And the sooner the government begin to, begin the journey towards the El Dorado scenario, the better. And the joy of it is that it's something that there's no limit to what, when Saudi started on this approach in 2016, 2017, they said they were looking for $200 billion and they listed assets, which they were, one of it was Aramco. Now, you go and ask them, they probably unlocked 5 times or more than that, in securitizable asset values. So Nigeria too, it's up to us. You want to raise $1 trillion, you can. India is trying to raise $2 trillion on its Invest India grid. So how much is Nigeria trying to raise? Because it's the surest path, to prosperity. And I hope that governments will carefully consider and accept to start the journey towards El Dorado. Then it doesn't take time. You can transform things in 6 months. You can transform things in a year. So it's not too late for the Buhari regime. They can still activate these components before they go. And in the event that they don't, or to whatever extent that they have started but haven't completed it, the next regime should key into it. So things are difficult for country Nigeria. Things do not necessarily have to be difficult.